Yes, when you hear about market rotation, that's sort of a fancy way of saying people are moving from one sector to another. What we've seen over the past few years really is a big premium placed on growth and momentum and away from value stocks. And seemingly over the past few sessions there's been a big reversal in that regard. I'm not going to say there's a total reversal. I think that some of this is overstated. We'd seen underperformance from value stocks, and I think they're playing catch up to a certain extent. One thing that I would be looking at would be the relationship between IWN and IWO, which pretty much split the Russell 2000 into growth and value. And over the past few sessions, the value sector is more or less caught up to the growth sector. But I wouldn't read too much into it. It's human nature. Particularly when you get into September, people start to think about protecting their profits for the year when they have them. And I would like to think that many people have them because the market has pretty much been on a steady upswing ever since the debacle of the fourth quarter last year, which also is an interesting thing to keep in mind because on a year-over-year basis, the market is up modestly. If you look year to date, the market is up dramatically. That's because the results are very much skewed by the fourth quarter sell-off. But institutional money managers are measured more or less on a year-to-date performance basis, and I think you start to get into the season, September and October, where they're more likely to want to protect some of their winnings in what can usually be considered a seasonally difficult period. So what do you get? You get a situation where people are selling their winners. Most investors have to be fully invested, professional investors that is, so they're moving to sectors that have been a bit unloved, so selling growth, buying value. Again, I wouldn't read too much into this. It's not like growth stocks have fallen off a cliff. It's more that the value stocks have played catch up, and that's been sort of the catalyst to the most recent leg up that we've seen over the past few sessions. Remember, this is human nature. A lot of this gets magnified. I think the current structure of the market, where there's a lot of algorithmic trading, as we've discussed in various other videos, and I'll be happy to continue to do so, a lot of algorithmic trading is trend following, and it follows what's working. And, well, what's working now is growth is underperforming, value is outperforming, and you start to see feedback effects based on that. So what also happens is you tend to get a bit of overshooting at the end. I wouldn't say we're at the end of this move, but it's certainly underway, and it's one of those things that can turn around in a heartbeat. Effectively, what I would like to think is it's sort of another reversion to the mean, that one sector that outperforms the other tends to come back into line eventually with the underperforming sector at some point. There's no guarantees of that. Lots of money has been lost following mean reversion strategies that don't revert. But when you see the rotation that we're seeing in this manner, where the better performing sectors have been underwhelming, and the worst performing sectors have been outperforming in the short term, I would say that's not necessarily an opportunity to chase. The other thing that I'd be very cognizant of, when you have major market moves, somebody is being disrupted on the other side. Somebody has probably got a leveraged bet that's wrong. And that's always one of those things that scares me a little bit. I don't see any obvious evidence of that now, but with some of the moves that we've seen where particularly as interest rate sensitive sectors have made big moves based on changes in the bond market, somebody out there is being left kind of hanging, and that would be the sort of thing I would be looking for. If you see signs of stress underlying a more placid exterior. But as of now, it's human nature. Sell your winners, buy the things that look cheap, and trade accordingly.